National Monetary Fund's second tranche funding may not necessarily guarantee debt sustainability by the end of the program in 2026.
The IMF program, whether we like it or not, is not so long term, right? 2026. 2026 is going to be difficult to say we have achieved debt sustainability.
Associate Professor of Finance Williams Prepra cautions government and other political parties to be mindful with their campaign promises in order to remain fiscally disciplined.
Especially this is a political season. Political parties must be careful with their campaign messages and promises, knowing that our tax revenue will not be able to help us to fulfill those promises.
As prices of petroleum products are expected to drop at the various pumps this week, we will speak to the National Petroleum Authority to ascertain the level of drop in prices. We have details of these and many others coming your way all in a moment. Please stay. Thanks so much for your company. I am Pius Kojo Baka. To our very first story, there will be no haircut on the $5.4 billion of bilateral debts expected to be restructured. These are some of the terms that Joy Business has picked up from the official creditor committee. Now, the cut-off date for restructuring Ghana's debt is now pegged at December 22 instead of March 2022. But speaking on a yet-to-be-aired PM Express Business Edition, Finance Minister Ken Ofori-Atta insists negotiations are yet to be finalized on the various terms.
Well, there was actually quite a bit of a miracle. As you know, the cutoff date has always been sort of March 2020. This was really extended to 2022 December, which is just great. So everybody can now be a part of this, and we can get into bilateral negotiations with each one. I think it gives us some leeway the next 3 years with regards to servicing of the loans that we have, and that gives us space for our own fiscal space to be able to insist on the type of development that we want. What we have now is it gives enough financial assurance for the IMF to sit. We now are going to take our time to get into the nitty-gritties of the MOU. And so that's what is ahead of us. But at least the major hurdle of them realizing a holistic term sheet to us has been achieved, and we'll now work with them into the details of that.
So does the preliminary term sheet include the no cut on the principal and the interest, and then the fact that there's still a freeze after 4 years before we start paying something as well? I
think those broad parameters, are in there, and I really don't want to be drawn into the details because those are really going to change. But what it does give us is that it gives us momentum to now proceed a lot more aggressively with our Eurobond investors and commercial creditors. So from Monday, we'll have a team that is now going to begin those discussions.
So now it means that you are ready to go to the board, because the IMF had always argued that what they were looking for was that financial insurance. Now that this has been reached, are you ready to go to the board? And is it now on the 19th of January that the board is waiting for you to do that? How ready is Ghana for this board now that this has been done?
I think we've been ready waiting for the OCC, because as you know, we had a very successful review in which the bank, the fund itself, commented on it. So we've all been kind of biting our fingernails waiting for China and France and all the bilaterals to come into this conclusion.
And lecturer at the University of Ghana Business School, Professor govt has stated that Ghana will struggle to achieve debt sustainability by the end of the IMF program in 2026. Now, the Minister of Finance, Ken Ofori-Atta, will travel to China on January 23 as the country seeks to restructure the $5.4 billion bilateral debt. Now, speaking on the issue, Professor govt expressed concern that it appears government is desperately seeking assurances to meet the IMF conditions for the $600 million second tranche funding, but the country may not achieve debt sustainability in the long term. He's been speaking on the AM show here on Joy News.
As at the end of 2023, government had accumulated more than $2 billion. So what that means is that that money that could have gone to creditors was now available to the country simply because of the few not paying. But then if you look at it broadly, in the medium to the long term, then you begin to associate with the interjection made by your colleague that to what extent that this led to long-term debt sustainability, right, over a longer term. And that is where I believe that there is some level of risk that we have to bear in mind. It may satisfy the concerns of the IMF. Remember, the IMF program, whether we like it or not, is not so long-term, right? 2026. 2026 is going to be difficult to say we have achieved debt sustainability. Probably a logical outcome would be ask for extension. So we said
an extension for how long? Another 2 years or another 4 years?
Another 2 years or so. Remember when the program was approved on May 17, 2023, when we examined it, our conclusion was that this is a program that is designed with extension in mind. So it's not going to be a 3-year program. Bear that in mind. Because if you look at the debt contour, the tragedy, and the country's own history, and the level of fiscal primary surplus that we'll be able to record, bearing in mind an election year in 2024, then the possibility of fiscal slippages, there's real risk, right, that we have to bear in mind. But to the extent that this agreement on time scarcity paves the way for the board to meet and approve our first review, I think we can take that with both hands. Remember, that is all we have been looking for. But it doesn't mean we are out of the room.
More on this, an economist and political risk analyst, Dr. Theo Champon, is casting doubt on the finance minister's statement that the economy has turned the corner. Now, according to him, the microeconomy is still going through challenges despite the relative stability in the macroeconomic front. Now, speaking on the AM show today on Joy News, Dr. Champon said the country has a long way to go in terms of economic recovery.
And if you look at some of the indicators on growth, on inflation, and on other sort of high-level frequency data, yes, it does show that things are beginning to improve in relative terms, but they're still high, right? For example, with inflation, it's still well over 20%, and it still there's room for it to come down much further. But compared to where we were 2 years ago, things are in a much better shape. And you can look at all the core indicators, and that's quite clear. At the micro level is where the challenge is when it comes to translating some of these gains into growth, into kind of call it relative prosperity. The last 2 years has been tough for many households in the country, and even some of the gains that the government has been talking about, some of which I've also highlighted here, it's going to take a while for that to translate into improving livelihoods, and incomes. And I think for the government, they are trying to push for as much of the gains to be felt now, given that you have an election in December of this year, and people have been squeezed very, very hard for the last, 2 years. So there's a bit of rhetoric on the other side in trying to drum up and sort of make it look as though some of these gains are beginning to improve. But if you look at the cost of doing business, if you look at the high tax environment, to the point that now even electricity, bills are going to be taxed. If you look at the fact that you're still having to pay in excess of 30% to borrow to be able to do business in the country, that is still constraining.
Still staying with the economy, Associate Professor at Andrews University in the USA, Professor Williams Pripra, has cautioned government and other political parties to be mindful with their campaign promises this year in order to remain fiscally disciplined. Now, according to him, it is incumbent on government to live within its means to sustain economic growth. His advice follows Fitch's warning that countries without access to international capital markets, including Ghana, will face some challenges. Now, reacting to this development, Professor Pripra maintained the best way to surmount this hurdle is to remain fiscally disciplined.
How to get out of this? So without the international capital market giving us financing, it means that we may have to live within our means. Government may have to look at which project they need to cut or suspend to be able to use the tax that we generate within the country to be able to satisfy these or complete these projects. And simply put, as the IMF say, we have to slow down development, or we have to slow down some aspects of the growth of the economy. And that is why we see IMF or World Bank normally, when they see that your country is out of the international capital market, they ask you to reduce your expected GDP growth. So once you see the expectation of GDP growth is coming down, it gives you an indication that the country may have some liquidity challenges, and that is what we have experienced now. So the advice to get out of this is, and especially this is a political season, and political parties must be careful with their campaign messages and promises, knowing that our tax revenue will not be able to help us to fulfill those promises. Promises a political party should give or may give must be within what is something that's within our budget. In the past, both parties, those who have managed Ghana, they've come out with huge promises. And when they come to implement, the funds are not there, then they go out to borrow. But this time, that we have learned our lessons, it is better to come out with a promise that you can fulfill within our means, the means of Ghana, not to try to borrow too much so that we find ourselves in the mess that we have now.
All right, so let's now switch topics to some other developing stories we are following up for you. Prices of petroleum products are expected to drop at the various pumps now. However, our checks at some outlets reveal these OMCs are yet to adjust prices. Now, the Chamber of Petroleum Consumers Ghana, COPEC, had earlier predicted prices of petrol and diesel will fall. But how do we ensure these OMCs comply? Joining us via Zoom is Head of Economic Regulations, National Petroleum Authority, Abbas Tatunti, for more on that. Thanks so much, Abbas, for joining me here on Business Live. Now, from your end, what indicators is the regulator picking up? And of course, what has the OMC submitted when it comes to the price review?
Thank you very much. We regularly update the public on the parameters that go into the determination of prices at the pumps. As you are aware, the National Petroleum Authority does not control price anymore because of the deregulated nature of the market. So what we publish daily is what we call the daily price indicators. And this gives you an idea of the changes in FOB prices, which is the world market price, and also gives an idea of the changes in the exchange rates that are used in determining prices. We've been monitoring this for a while now. So if you look at what we expected for this window, which is a window that starts today, the 16th of January, we saw that the price of petrol on the world market increased, whilst the price of diesel also increased, and because it decreased a little. Because of this, our projections for this window show that prices are supposed to go up. I heard the projection that was made by COPEC, I was a bit surprised that they projected that petrol would drop, because for petrol, our projection shows that petrol is supposed to go up by about 3%, almost 4%, 3.63%. Diesel is supposed to go up by about 0.78%. It's LPG that we expected a drop. That's at the pump. So today being the first day of the window, we've not seen any significant changes on the market yet. Usually the marketers do not change their price on the first day of the window. So it will take a while before we see the prices being changed at the pump. It is not every time that when we project price increases, the market follows that. The market, because it's deregulated, like I've said, there are times when our projections may indicate that the price have to go up, but the marketers will maintain their prices. So it's a bit early to confirm whether the market will go up or down. For diesel, like I said, the change is very insignificant. It's petrol that we expect a significant increase, which is about 3%, a little over 3%.
All right, so help me understand the mechanisms you have put in place to ensure that when prices are supposed to be reviewed, whether upwards or downwards, indeed, we the consumers get to benefit if, of course, it's reduced.
So like I indicated, we publish, even though we do not regulate prices, we publish this indicative price to give everyone that idea what we should expect on the market. So as a regulator, I think you mentioned earlier that the marketers are supposed to submit their indicative prices to us, which they do. So when they submit their indicative price, our work is to ensure that they've calculated their price in accordance with the prescribed petroleum formula. Even though we do not announce the price, if we think that any marketer has not followed the price appropriately, and if there should be a significant drop in price and they have not dropped their price, then we as a regulator can invite or investigate or get that marketer to do the needful. We do not tell you to move your price from 1 to 2, but we have an idea that prices are supposed to drop and therefore you have to do the needful, and that's what we do. So on a regular basis, we review this price and ensure that everyone is following. You would have observed that there have been so many instances where prices have dropped and the marketers themselves have done that. We are not supposed to follow them with a whip and ask them to drop price. Same way when prices have to go up, we don't do that. The market itself regulates itself. But then if we notice that any marketer is not doing the needful, that's when we come in. With the high number of marketers we have on our market and the level of competition we have, you hardly have any marketer not dropping their price when there has to be a price drop. And that's why we are there to ensure that we follow keenly.
Great education on that. But how is the cedi's stability expected to influence forward prices going forward?
So actually, the major factor that influences our prices here in Ghana is the exchange rate. So the stability of cedi, I think last year, generally we had our prices did not move very high as compared to the previous year. And that was because our currency was quite stable last year. So if the cedi is very stable, then we expect that our prices at the pumps will also be very stable. When the cedi is depreciating rapidly, then we tend to have the situation where even if prices on the world market drop, the depreciation of the cedi can erode that and we end up seeing prices going up or not even dropping to the levels I would have expected. So the stability of the cedi is very, very key to have us having very stable pump prices.
All right. So Abbas, tell me about the cylinder recirculation model program. It's been quite some time now. We've not heard more about it.
So actually, a lot is ongoing with the cylinder recirculation model. I'm sure since we announced the launch last September, a lot has been happening. What we've been waiting for all this while has been the readiness of the bottling plants to start rolling out. A number of them have submitted a list of outlets that they are going to use to start the rollout. And we are assessing these outlets. The important thing is that we have to make sure that every outlet has met the requirements before they can start selling LPG. And that's ongoing. Our inspections and monitoring department has been checking with this. Once they approve these outlets, we will see them rolling out. A number of them have already shown us their cages which are ready. I mean, the bottling plants and their marketing companies. So once all this is ready, currently what the MPA is doing is continuously educating the public to be ready for the rollout. We've been visiting churches, we've been visiting a number of communities and doing the education. But in terms of operational rollout, the bottling plants are ready. And once the exchange points are also ready, we'll see them coming up.
A quick one on the ban on importation of some type of petroleum products, as announced by yourself or the authority, I should say, will start on January 1. How far with that? Are members complying?
So that has already started. Actually, before even 1st January, due to the nature of this challenge that we had, a number of the importers had already started bringing in products that met that requirement. But from 1st January, we gave the importers ample time to be able to meet these requirements. So from the Quality Assurance Directorate of NPA, we confirmed that the products that have started coming in are all meeting our standards. As you are aware, if any product is coming in and does not meet the national standards or the standard that has been set, we reject these cargoes, and we continue to do that.
Head Economic Regulations at the National Petroleum Authority, Abbas Tasunti, we are indeed grateful for your time here on Business Live. Thanks so much for speaking to us. You're still watching Business Live. Time for a breather. I'll be right back with more. Hello, welcome back to Business Live. More businesses are considering equity funding to expand the operations rather than commercial loans. This is due to the high interest rates offered by banks as a result of the increase in the reference rates. According to a survey by auditing and advisory firm KPMG Ghana, businesses in the country are moving away from commercial loans and rather seeking equity financing in order to survive. Evans Asare is partner deal advisory at KPMG Ghana.
I was speaking with one of the industry players, leaders, and he was saying that, look, even outside Ghana, interest rates are high. So the US rates are high. Okay, so it is not even, there is no incentive to even go outside to go and borrow because the cost, you borrow at $1, you bring it here, you come and use it, and then it gets eaten away by your depreciation. Okay, so businesses were torn in between, should we expand? Should we, and if we want to expand, do we go for credit at 35, 40%, or probably instead of, excuse me, instead of using the funds for expansion, would they buy treasury bills, okay, and then earn the rates that government is offering for treasury bills instead of using it to support the real sector, okay? So it's more of a balancing act that businesses need to make, or a choice they have to make. That's okay. Should we maintain the current production level? If we want to expand, we need funding. Where should we go? Okay. So I think the alternative that businesses are looking at is rather more of equity participation. Okay. How they can go to the stock market or to private equity firms to see how they generate funds at a rate that is quite reasonable. And others are also going on to the fixed income market, okay? The fixed income market where they are going to raise bonds, okay? So we know businesses that are refinancing commercial loans using, bonds on the fixed income market because it's become uncompetitive to use the commercial funding sources. But of course, it is a limited market. The fixed income market is quite limited. How many businesses can go on?
One of the big questions about artificial intelligence, otherwise known as AI, is how it will impact people's jobs. According to a new International Monetary Fund study, 40% of global employment will be impacted by AI. Now, that number goes up to 60% in advanced economies. IMF Managing Director Kristalina Georgieva, speaking on the report, disclosed that those who lose their jobs will need to be retrained for other roles and may need government assistance in doing so. In this package, by way of Business Life, I am Pius Kojo Baka with govt International Business for you. See you same time tomorrow. Bye.